Hi guys, how are you doing? So, welcome back to the channel Milking Pips, and we would be discussing today about the data from in the forex market. That what are the data that are fundamentals that are coming right now, and we would be also talking about the charts in order to analyze that how we can actually capitalize based on those data, and how we need to actually manage our trades according to that. And we can see the wonderful moves happening, and really excited about like coming data for the tomorrow. And you can join the stream, and we would be talking about any kind of questions which you be having. And I want you to subscribe the channel, support the channel, so that we can actually discuss the things out there. So let's see if the audience actually get attracted and like start coming, because we would be looking into everything out there. So let's not waste the time, and let's jump into the understanding that how things are. We can see that this is all these times are the Eastern Standard Time, the New York Times currently. And we can see right here at 4:30 a.m. we would be having a pound data that is coming, and there is a member that would be speaking. Along with that, we do have euro M3 money supply data that will be coming out yearly basis. It's an important data, specifically related to the ECB, European Central Bank, and then private loans data yearly. Then Euro economic forecast. So it is like overall data that is basically a forecast that would be coming out, and it's like a annual report or something like that. And then at 8:30 a.m. most important data that we would be having our GDP data quarterly for United States. And we do have an unemployment claims also coming out for United States. And then final GDP index quarterly that would be coming out. Then goods trade balance, really important data that is coming out. And we can see right here there is a big difference in the previous and the forecasted one. It's kind of like improving, so we'll talk about that as well. And we do have a plain wholesales inventory monthly data that will be coming out. And then at 10 a.m. we would be having a pending home sales monthly data would be coming out. Then natural gas storage data would be coming out. Then there would be a European Central Bank president speaks that would be happening. And then FOMC member speaks would be happening. And then later, really important data for the Canadian for the yens would be coming out. That is the CPI data for the yearly CPI would be coming out, and really important as well. And then BOJ's summary of opinion that would be coming out. So we can see in each and every aspect that we do have an opportunity out here, and we have to be careful. Along with that, we have to be sharp, and we can discuss each and every data out here. So we can see that this is a part this is due to participate in the panel discussion titled inflation targeting in United Kingdom over a post-pandemic period at South African Reserve Bank. So this conference is happening in South Africa. So BOE MPC members vote, that is the Monetary Policy Committee members vote on where to set a nation's key interest rate, and their public engagement are often used to drop a substantial clues regarding the future monetary policy. Then we have like euro money supply at 5 a.m. that the change in the total quantity of domestic currency into the circulation and deposited in the bank. So money supply is always controlled by the central banks, and really important data that is being released. So released monthly about 28 days after the month end, and it is positively correlated with the interest rates early in the economic cycle, and increasing supply of the money leads to the additional spending and investment, and later in the cycle expanding the money supply lead to the inflation. So then, so actual greater than the forecast is good for the currency. So more money that would be circulating in the market, more would be the potential opportunity for the projects to start. So that's kind of like the thing to even actually push the the understanding. Then we do have EU economic forecast. More hawkish than expected is good for currency. That is basically quarterly. This is the report that includes the economic factors for the EU member states over the next 2 years and covering about 180 variables. Source change release frequency from twice per year to thrice times per year of Feb 2012 from the three times per year quarterly. So forecast serve as an European Commission's basis for the evaluating economic performance and trend of the EU members in regard to the political uh, austerity measures and other forced spending cuts. So it is a full forecast. So this is an important data that will be coming out. That is GDP. That is the annualized change in inflation adjusted value of all goods and services produced by the economy. So it is actually the changes and also includes the inflation adjusted changes that goods and services which are produced by the economy, and it is known as a quarterly data. As you can see that there are like 4 quarters in a year. So the previous listed is annual from the preliminary release, and therefore the history data will appear unconnected and 3 versions, and it is a broad measure of economic activity and primary gauge for the economic health. So we can see that, and later on we would be having unemployment claims, that a number of individuals who filed for the unemployment insurances for the first time during the past week. Although it is generally viewed as a lagging indicator, a number of the unemployed people is an important signal for the overall economic health, because the consumer spending is highly correlated with the labor market, and unemployment is also major consideration for steering the country's economic and monetary policies. So it is good data there, but it comes out every week. So annualized change in the prices of all and goods and services in GDP. So it is not an inflation adjusted, but it is an annualized change in the price of goods and services. So that's why like it is a different, a little bit of a different data. So then we have goods trade balance. That is the difference between the imported and exported goods during the previous month, and usually the exports are imports are greater in United States rather than exports. So actual, that's why this number is negative. But we can see right here that with the President Trump regime, we can see that there's a little bit of improvement in there that is being forecasted. Currently the trade in export demands and currency demands are linked, because the foreign must buy the domestic currency to pay for the nation's exports and export. So the foreign currencies, foreigners like the people who are actually buying the exports must buy in the domestic currency to pay for the nation's export demand also impacts the production and prices at the domestic manufacturers. So a positive number indicates that more goods were exported than imported, but overall we can see that data is a little bit on the positive side right now, rather than like the previous data, the forecasted one is. And then preliminary wholesale inventories, the total number of value of the goods held in the inventory by the wholesalers, and it is signal for the future business spending, because companies are more likely to purchase goods once they have depleted the inventories. Then pending home sales is the change in the number of homes under contract to be sold but still awaiting the closing transaction, excluding the new construction. And it is a leading indicator for the economic health, because the sales of the home trigger wide reaching ripple effect. For example, renovations done by the new owners and mortgage sold by the banks, and the brokers are paid and execute the transactions. And then we have like a natural gas storage, that a change in the number of cubic feet of the natural gas held in the underground storage during the past week. So If there is less gas that is being held, it means that more gas has been sold. So if there is more gas available, that means that less gas has been used and been sold. So this means that the prices would be decreased whenever the import would be done. So inventories are used to maintain the price stability, and this is from the energy information administration. And then the speaks about ECB, that is basically control the short-term interest rates, that has influence on the euro, and it actually like forecasts the futures monetary policy. Then CPI, that is the change in the price of goods and services purchased by the consumers in Tokyo, and excluding the fresh food, and that is a bit of the perishable item. And consumer prices account for the majority of overall inflation. Inflation is important in the country valuation because rising prices lead to the central banks to tighten the monetary policy out of the respect for their inflation containment. And then there is summary of opinion. Similarly, this is BOJ's summary, and this is European Union, EU economic forecast. It's around about similar stuff out there. So these are the data that will be coming out. Really important aspect that we can see that there would be a high amount of volatility around 8 a.m. till 4 p.m. At New York time. So really a good amount of data that would be coming out. So let's check out some of the news. So this was a press conference that was held today. It wasn't actually scheduled, but it was scheduled on the current basis. So the White House says that the Trump to hold the press conference at 4, and Trump will be people will be pleasantly surprised on April 2nd. So there are some kind of really important information that would be conveyed by the president on April 2nd. Excuse me, guys. So we need to be actually ready for April 2nd as well, because this is a big hype that is happening. So because the Trump would be signing the tariffs executive orders on autos, and will have a strong policing of the auto tariffs, by the way, on April 2nd as well. So 25% of the tariffs on the autos not manufactured in United States. This is what the today's press conference was all about. And 25% tariffs on the auto not manufactured in United States, and if constructed in United States, no tariff. And Trump reiterates April 2nd that is Liberation Day, will have a news press conference, and Trump confirms the 25% of the tariffs on non-US made. And this was the hot news yesterday, and we can see right here. So this is Carne is basically Canada's Carne say that they will be reacting to the US tariff announcement and can introduce retaliatory tariffs. So that is a war that is being happening right now. So February US PCE inflation forecast shows inflation staying above the Federal Reserve target. So PEC basically is a really important data that actually announced, and in February that happened, and it really works on the level of the consumers on the grassroots level. rather than like CPI is basically on a bit of on the manufacturing and industrial side, but PCE is like really on the small target, like really consumers, and it shows about the consumers. Then China's vice premier will implement more proactive macro policies this year. So China industry profits dropped 0.3% at the start of the year as a tariff risk. Uh, as they start facing the tariff risk, so the China's industry actually fell 0.3% in the beginning of the year, and yeah, this is how things are looking currently. And I also want to look at some other news is out there so that we can actually understand. So Japan warns of the retaliation against the US auto tariffs. So Japan will not rule out the countermeasure against the Trump administration's 25% tariff on US imports. Prime Minister said on Thursday in Parliament he stressed the need to protect the country's nation's interest, arguing that the largest investors in US Japan should not be treated as the same as other nations. The tariff set to take effect on April 2nd implies that all US manufacture, despite of Japan's diplomatic effort, including increased investments in the energy purchases to secure exemptions. Meanwhile, gentleman spokesperson also called US labor highly regrettable. So there is like a thing that is happening in Japan, and China's industrial profit dropped slightly in the Jan and Feb. We can see that the profits in the Chinese industries declined 0.3% year to year to CNY in 910 billion in first 2 months of 2025, reflecting ongoing deflationary prices and rising trade tension in US. However, this marked an improvement from 0.3% 3.3% drop in 2024, the third consecutive year of contracting. So UK car production down 11.6% in February. So see how things are affecting. In Australia, 10-year bond yield increased to 4-week high of 4.54%. So if the bond yields are performing good, it means that the currency is performing good. So we would be keeping that thing in mind when we would be analyzing Australian dollar as well. So important stuff out here. US crude oil stocks fall more than expected. This is 14 hours. So crude oil inventories in US fell by 3.41 million barrels in week ending March 21, above the market expectations of 1.6 million draw. Data of EIA petroleum status report showed. So the crude oil actually fell by a million barrels. US 10 Treasury yield rose to 4.355% on Wednesday, the highest in the 4 weeks, reflecting the growing investor uncertainty about economy, and concerns about the potential recession are mounting with the expectation of a growing economic turndown in late 2025. The market sentiment have been rattled by President Trump shifting the tariff policy, rising fears of the global trade war that could slow US economy growth. So treasury yields are rising. It is like a good thing, but it also reflects the uncertainty. Weak economic data has added pressure. Consumer confidence hits 12 years low, and 12 years low. The consumer confidence data has been decreased. So it is the new orders for the new defense capital goods, aircraft, and key measures. So investors are closely watching the upcoming PEC report, which could influence the Federal Reserve policy, and inflation remains stubborn, and Fed may delay cuts rate. So this is really important that they are looking at PEC data, and PEC data is coming on Friday. That's why we are looking at this a little bit on the PEC side as well. So US durable goods order unexpectedly rising. New orders for manufactured durable goods in United States unexpectedly raised 2.7 billion, or 0.9%, and this gave like a good bullish pump today, by the way. So this is today's data, that is core durable goods data that actually came out, and that was on basically on Wednesday. What is core durable goods is the change in the total value of the new purchase order placed with manufacturers for durable goods, excluding the transport items. So 3.3% jump in January. The transport equipment led to increase. So this is how the things are happening, guys. Just give me a minute, a second, sorry. So this is so guys, like I'm sorry my mic was turned off, but I can like re-explain this. So just give me a sec. What I was telling you guys, that right here we can see that the dollar actually broke out of this zone around here. This is a breakout that happened in DXY, but the opening today of the dollar is in the bearish candle. So there might be like they might be pulling back around this zone around here. We might see a continuation move, but if not, then we might see a move on the downside like that, to even like take out these people who are like looking on the long side. But I was telling you that the idea is more based on the fundamental side of this stream. So now it coming to USD CAD. Right here we can see that this was a demand zone that actually acted really good around this point, and this is a strong demand right here. And we saw the reaction that happened, and then prices are pulling back just because of the idea that the dollar opened weak. That's why we are looking at this downside move on this candle. So let's see how DXY actually performs tomorrow because of the tariffs imposition today. And similarly Swiss is also coming down based on the DXY right here. And then USD-JPY gave us like a good reaction from this, making this turning to this bullish momentum right here. Then prices pulled back, then gave us this move on the upside, came back, pushed on the upper side, failed to break on the upper side like that. And now as the DXY opened today bearish, we can see this reaction happening. And according to the current structure, price might be pushing on the downside like that. So the idea remains the same, that dollar is weak right now based on the opening price of the dollar, that it opened weak. But overall, like we can see that yens might be more weaker, so dollar might be like pulling back a little bit. But let's see how things actually perform. But overall, we do have like GDP data tomorrow, so let's see. Then Euro USD, as we know that the DXY, that by DXY what I mean is dollar. So as we know that the dollar opened bearish, so that's why we saw this big momentum move on the upside in euro. So this makes sense. Then Euro GBP right here, Euro GBP gave us this wonderful move on the upside, and this was actually based on let me store this. This was actually based on this move that happened was actually based on the CPI for the pound. So that's why we saw this big reaction. And later on, when the prices stabilized, we can see that the prices came back down there. And let's see how pound would be reacting around this point, so we can actually understand that. And with the euro is not that strengthful here, and euro although was strengthful like yesterday, but today with the bearish opening for the euro as well, we can see the reaction that is happening right now. And if we see the daily candle right here, we can see that prices actually are pushing on the downside. We got a big reaction, and the opening price right now for the euro is also on the bearish side. So that's why we are looking at the weakness in the euro. And then euro NZD right here, we can see right here there was a breakout continuation move. Price tried to go on the upper side but failed to break on the upper side, and eventually like broke on the downside like that. And now it's like reacting around here, and euro is kind of like weak, so most expectedly the prices would be coming down there. So it's a good setup right here, by the way. Similarly in euro cad today, the euro gave a good downside move today, by the way. So this was the reaction that happened with that. And we can see that prices pushed on the downside and came around here and went back up. And I kind of like tried taking this position and locked in some of the profits around here, so trade got scratched later on. But this was the setup, and later on we can see that it turned into this doji right here. And it's a good sign that if the CAD gets weak tomorrow based on the oil data that is coming out, so we might like see a continuation on the upper side like that. Otherwise this can go down further based on the euro, because as we can see that tariffs were imposed today. And one more important thing, let me tell you that we would be having the natural gas data tomorrow. So sorry, today we would be having the natural gas data as well. Let's see how things would be impacted around this point for the Canadian dollar and euro JPY. We can see right here there was a break on the upper side. Prices came back, retested this level, tried to push on the upper side, failed to break, came back down there. And this can give us a continuation move on the downside. Really a wonderful setup again. I would like to look at it after the stream as well. Euro CHF right here, after giving us like this 3 candles retracement downside, we are expecting a little bit move on the upper side. But you can see that how the levels are working perfectly, that we can see a reaction around this point. Not a big break, but it can actually like fail on and go on the downside. But we have to actually understand the context right here. Overall euro is kind of like performing right now, but the other pairs are also strong in that case, because dollar is going down, so Swiss would be going up as well, and euro USD is also going up as well. So that's why we were looking at that kind of reaction. So pound, after the CPI report, gave us this move on the downside. Really a great move with the CPI, and now it's recovering back a little bit and recovering from the same order block right here. And a wonderful recovery, around about like 70% recovery that has been done. Similarly, pound Aussie, not much in the volatility out here. So this was like a break, and again a great move on the upside, and then prices can push on the downside further based on the pound and New Zealand kiwi out here. Otherwise, like it could be like a small pullback and then a further break, and prices can go on the upper side like that. But really have to like monitor this trade as well. GBP CAD right here, we are looking a little bit of the reaction of the weakness in the Canadian dollar, so that's why we are looking this move around here. So let's see how the prices actually react around this point. We might see a small reaction around this point, but if the prices like start forming a range around here, we might see a break on the upper side. And similarly, pound JPY, we can see that the reaction in the pound JPY is more on the side of the bullishness around here, and pound CHF as well on the bullish side. Australian dollar is also opened moving on the bullish side based on the DXY, and a good setup here as well. We can see right here that we got like a 3 touches around this point, a small pullback on the continuation move on the upper side, failed to break on the upper side, came back down there, took the liquidity around this point, made a peak formation low around here, and then break, retested, moved on the upper side. So if we kind of like zoom in here, so if we kind of like zoom in here, we can see that the prices went up, came back down, prices tried to push on the upper side, failed to break, a small range formation here. Technically the prices should have like gone downside like that because of this break, but there's another retest that is happening around here. So let's see if the Australian dollar is more weaker than New Zealand Kiwi, the prices would be pushed on the downside and can give us a good potential opportunity in that case as well. So AUD CAD right here, we can see that the weakness in the CAD has been like continuously be seen in all the pairs right here, and the reaction that is happening here is a bit on the bullish side, but there is this range, so prices has to like break this range in order to continue on the upper side. And similarly in the yens, we can see that the weakness in the yens lies more than Australian dollar, and that's why we are seeing this push on the upper side. Again in the Swiss, the same structure, and we can see in New Zealand Kiwi right here that Kiwis got strengthened here. I was expecting a little bit of retracement around this point based on this order block, but we couldn't find the reaction at the moment. So overall the structure which we are looking here is the similar reaction based on the DXY, that the weakness in the DXY is pushing this New Zealand Kiwi dollar on the upper side. And in NZD CAD we can see the reaction around this order block. Really a wonderful reaction, a good setup out here. So I would be noting this setup down, because if we can even like get a, so if the momentum persists in here and if we can get a break from this point, so any sort of a pullback can give us a move on the upside. But really important to see that how the Canadian dollar reacts. A really wonderful ranges forming around here. If we see like a measured move here, we can expect the prices to be pushed on the upper side, like to the level of 180 0.8 to 500 level. So I want to place my alert right in there because it's a nice setup, but I don't want to like participate in the middle, but instead I want to like see a good break first, like break around this point even can give us a good momentum shift on the upper side. And NZD-JPY right here, we can see the reaction happening, and the reaction that we got, prices were like making a downtrend right here, and we can see that now the trend is being shifted on upper side. After this break, prices came back exactly here, kind of like break on the upper side, failed to break further, gave us a downside move, and now prices are again like pushing on the upper side. So my much likelihood is that this can continue and eventually like go till up till that level as well. So really a nice setup in the DJPY as well. A wonderful momentum is being built in here currently, and this could be either based on this order block right here as well. So wonderful move happening, but overall the strength in the candle is a lot because of this, the way it is developing like without any wick. There is a small wick down there, but this could be an engulfing bar most likelihood, and price might react around this point a little bit, but we might see a continuation around that point as well. So similarly, NZD CHF, we can see the strength in the NZD is awesome. Prices are pushing on the upper side, and we are looking at a good reaction around this point. CAD JPY right here. So this was an SNR right here, breakout again, pulling back exactly level to level here, and then again a breakout formation around here, exactly returning back to the level, retesting this uh, market structure here and the high here, and then we can see a break around this point. And right now prices went up, and there is a order block right here as well. This might be like reacting a little bit around here, so we can see the reaction that is happening. And although the trend is more on the bullish side right now, but overall it depends upon like the Canadian dollar weakness. And as I'm like looking and going through the different pairs, I believe that Canadian dollar can get weak, and certainly prices can reach to this point to retest this order block around here, and then we can expect the prices to continue further like that. CAD CHF, amazing structure formation again, a little bit of a bullish momentum being built in here. And although like we had this range around this point, then there was a shift in the range on the downside, and prices reaching back to this order block right here. And after that we can see the break again happened, again a break happened, again prices pulled back to this point, and again prices pushed on the upper side. Let's see how the momentum in the CAD actually happens. But although we do have a peak formation high here, so prices might come back down there as well, and then we might start looking for a reaction, and further even can prices go to this level, and then prices can push on the upper side like that. But it all depends upon the Canadian dollar strength, that either they are that strong that they can either push the prices on the upper side. And similarly CHF JPY, we got a good big formation high according to this order block right here, and prices failed to break around that point. Prices came back down there, again pushed on the upper side, failed to break around here. This range formation is healthy. Much likelihood is that we might see a reaction on the bottom side like that. Because it has been like the third touch right here. Although the liquidity sweep didn't happen properly, like there might be a third move on the upper side, and then prices can go on the downside like that if the prices have like the weakness as compared to yens. But seems like Swiss and yens are like equally strong right now, so that's why we are looking at this range. And again back to DXY. So guys, this was a small analysis. If you have any pair you want me to look at, so do let me know. We can actually like look at that pair, and I can give you my insight based on that. And if we see gold right here, how gold is actually reacting, gold is in this range right here. Although we did had some small kind of rejections around this point, but eventually like got a little bit of a reaction around that point as well. But again the prices are pushing on the upper side. This move kind of like happened based on the DXY selling today, and let's see how things actually react. If the dollar like kept on going on the downside, we might see a move on the upper side like that, or maybe around this point. So do you want any pair to be analyzed? So do let me know. By the way, I had like a good trade in Chinese yuan based on the understanding that the prices were kind of like breaking out of this zone. This is like a move that I was able to like capture the move fully up till that level based on this neckline around here. It was a perfect exit for me, and really happy with that. Although like the prices again came back down, of course like prices will come down because of like the fundamentals that are being persistent in the market. So based on the tariffs and everything, but I was able to like lock this position around here. So if there is any kind of pair you want me to analyze, do let me know. The Mexican dollar also gave us a wonderful move from this point. Went on the upper side, came back down, retested around here, and then went on the upper side like that, gave us a wonderful opportunity. And I was like so much ready to take this opportunity, but due to like being in United States, we don't have much of a leverage out here. So based on that, I couldn't like enter the trade around that point, but it was a wonderful opportunity. Was looking at it like an eagle. Really understood the price action at that moment. And there's something going into the lira these days as well. And the idea with that, based on the political uncertainty, we can see a shift in the prices of lira as well. So lira was like although going on the upper side, but due to the political instability, we had this bullish pump in dollar as compared to lira right here. And we can see that this actually gained my interest a little bit. Prices again came back, but the graph has shifted from this point to this point, and this is like really astonishing. We'll be looking at it. And Wanda on the secondly like has stopped trading in lira anymore. We can see right here. So Wanda, Japan, Jap- basically the Wanda is like worldwide. So in the Japanese incorporation, Wanda has subsidiary of the online broker Wanda Corporation today announced restriction on trading Turkish lira. In a notice to its client, that a broker explained that currently there are large fluctuations in the financials. So that's why just wanted to like let you know that how things are looking in lira as well. So DXY seems to be holding this level around 104 level around this point. Around here we can see that this DXY is holding this level, and this could be a good opportunity because at least it would give us the understanding that what are the plans. Because right here if you see the daily candle, there wasn't any kind of wick, but now a wick has been like started to develop a little bit based on the opening price of yesterday, because this is the opening price. If we talk about this uh, green candle around here, we can see that the price opened around here, went back on a downside a little bit, and then a bullish move on the upper side like that, and closed around this point. And then the new price opened around here without a small wick, and then we can see that prices came back down there and now like running around this point. So this is how things are looking right now. If any questions, do let me know. If you wanna like want any pair to be analyzed, do let me know. Okay, we can check USD GBP USD right here. So as we have seen that DXY actually opened bearish today, so that's why we got this bullish pump in pound right here. This was yesterday's CPI downfall that actually came on the downside, and we can see the reaction around this order block that is happening, kind of like a demand zone, because the first reaction that actually came around this point, that this was an order block, prices came back down within this order block, made this peak formation low around here, and again the reaction that happened around this point. And on the current scenario, we have to see that how the GDP for the dollar would be coming tomorrow, not tomorrow but today at 8:30 in the morning. So most likelihood is for U of the buy, it would be on at 5:30 in evening. So we have to actually wait for that. But on the current scenario, we can see and compare it with like DXY, and so this is DXY right here, and this is pound. We can see that a little bit of a reaction happening around this point in DXY, but it is not prominent enough that the prices might like shift on the upper side, although we got like a intense move on the downside, an engulfing candle around here. You can see this move that happened in creating an engulf, a little bit of a pullback, and then prices might continue on the downside. I personally believe that prices might be coming back around this point, and then after that we can get a move. So according to the DXY, we might get a reaction around here, that there might be a small pullback around here and then continuation on the upper side like that. If you see in 1 hour right here, in 1 hour we can see that this is a good break that happened, and if the prices would be coming on the downside for the pound, we might have to like actually wait for like this kind of reaction, that price failed to break on the upper side and then a range formation, and then price can come on the downside. But let's see how the DXY actually reacts, because tomorrow more data would be on the side of the dollar, because if the dollar starts getting stronger like in the late night today, we might expect a move on the downside like that to retest this level. But on the current scenario, we can see that pound is like good, is bullish. And if we see the daily time frame of the pound as well, so it would give you a better understanding that the opening price is directly like bullish on the upper side. So this is a move. We might see a reaction up till that level, and then prices can come down and retrace for a little while, and then we can like see a further push on the upper side. But it really depends, like if the DXY actually get weakens around this point. What I am saying of that by that the prices in DXY actually depend upon the pound. So if the DXY starts to come on the downside, so in that case we can expect the GDP to go on the GBP to go on the upper side. But technically, if we see that the prices like might push even to this opening price of the previous day, and then we might see a pullback, and then we can see a continuation move further. But right now you can see that the DXY is kind of like holding around this point, which signals that we might see a push on the downside that might create a little bit of a pullback. overall, if we see the structure as well, it is like still on the bullish side. The break, there is no break. If there would have been any kind of break on the downside, we might have like thought about taking a sell structure around that, but right now we can see that exactly from this point the prices are pushing on the upper side. So there is no break around this point. So in that case, we have to actually look at this range, or it could be in a range formation right now. So we can see that Australian dollar is stronger, really stronger. So we might be looking at this could be a good potential setup right here. We can see the momentum that is being coming around this point. So this is like a head and shoulder around here. This is Euro Aussie right here. Price is reacting around this neckline and can even like push on the downside like that. Anyway guys, I hope the stream cleared much of the points. If you do have any kind of like more questions, so do let me know, but otherwise I would be going soon. Anyway, guys, thank you. If there is any kind of setup, I would be making a video on that. I would be posting for you guys. So do follow and take care.